Hey everybody, Chris Bober here with Nebraska Realty. I'm an associate broker and leader of Team Bober with Nebraska Realty. And on this beautiful September day, I wanted to get you guys caught up on what's going on in the Omaha market with the real estate stats and everything. There's a lot I want to also dispel a lot of myths today. I think a lot of people assume that if you put a house on the market, it's going to sell in 2 hours with 12 offers for 20% more than asking price. And so many times, like anything else, rumors get going and people start taking off on trends, and those are the expectations. But let's have a look currently at what the market is and maybe where it might be going. I'm going to put all this stuff, of course, live today. I'm going to write an article and put it on my blog and post it to all the social media channels. So you can look for that coming up. So to start out, let's have a current look at our market. This is for the Omaha metro area. These are our MLS stats. As you can see, we're starting to see some indication the market is kind of maybe leveling off or not doing as well as it was before, because currently the number on market, you can see it's down 15%. What that means is that there's 15% less houses for sale or up in July, which is our most recent stats. 15% of houses were on the market in July than there were the previous year. There was 7% less that were under contract, and up until this date, up until the end of July, we are down 1%. So while the inventory is down, the prices, overall with volume are up. So we're looking at about the same amount when it comes to volume sold. So you can see right here, we're literally almost exactly the same. The decimal points don't go far enough. When you look at, we're actually $1.6 billion in sales this up through July so far. You don't see the other decimal points, but that's up about 3%. So it is still going up. The new sale price is up to, in 2016, it's $282. Last year it was $282 as well. So you're looking at about the same thing. The existing sale price has gone up significantly. You look, it's up 7%, which is a big deal. So a house last year in July, house this year in July, it went up 7%. So let's dive. I want to dive just a little bit deeper into the stats, so maybe we see some trends emerging here, so you can just have a better knowledge of the real estate market. So as we look here a little bit deeper, let's look at some stats that are showing up that are kind of catching us up on the market all the way to now. So the average sale price right now for this year is $203,000. Now that's the first time ever the average sale price in Omaha has been over $200,000. So you can see values are going up. When values are, prices probably are more accurate term to use there. The prices are over $200,000 just for if you average them all out. All right. Average existing price is $190,000. Average new construction price is $304,000. So you can see that's a lot. Also, the median national average, just for a point of reference, is $244,000. So if you look at ours, which is over 200, which is at $200,000, we're not in the highest market and we're also not in the lowest market, but we are slightly below the national median price. So the thing that's important, you look at trends and how things go up and up. Again, we're not saying there's a bubble to burst here, but we are in the 53 consecutive months of year-over gains. So every month for the last 53 months was better than it was the previous year. That's a pretty nice trend line that's going up like this. How far that goes, what happens to it, who knows? But we'll look at some things here maybe that are identifying the market today. So if we look a little bit closer, some other stats I think are interesting are the number of closings. So in 2015 through July, there was 1,500 closings in the Omaha market. This year through July of 2016, there's 1,354. So there is 225 less closings, but the volume's the same or a little bit better. So you're looking at better, higher priced homes. There's just a little bit less than them selling. So another thing that comes up is everyone just kind of makes a general statement about the real estate market and says, well, my house is going to sell for 10% more year after year. It's going to sell quick. They kind of apply generalities to the entire market, but what really separates our market is the price ranges. So if you look at the price ranges of the closings in this year, you see that $100,000 or less is $1,200, 1 to 200, $3,829, and go on. And then the biggest market out there where it kind of drops off is 200 to 300 is $1,978. Now after that, 300 to 400, there's only been 771 sales. 4 to 500, 318, and 500 plus is 2.24. The luxury market, 500 plus is less than 3% of the sales in Omaha. So one of the things that I like to point out here is that about 85% of the market was under $300,000. So that's most of the market in Omaha is $300,000 or below. The hard part about this, if the average new construction price is $304,000, 85% of the market is below $300,000. Well, how affordable is that new construction out there right now? So it really can only service about 15% of the market, and we're starting to see the gap between affordability and pricing. So new construction to build the new houses, it's fair to say that we have a severe shortage of inventory out there. The houses they are building are so far out of the market, and we're starting to see a gap. That's going to be a problem that we're going to have to identify soon, and we're going to continue to look at some solutions to those, but that's kind of where we're looking at right now. So to move on just a little bit more, I think you want to look at the average days on market. Again, people think houses go like that, all right? Now, if you look at the average days on market, these are the days on market, and then this is their median, which means that it's the center point of where most of the things lie. So under 250,000, wow. In fact, that's a typo right there. That's under, I believe, 100,000. Right there, you're looking, excuse me, under $250,000 is average days of 31 days on market. Now, that includes all sales under $250,000. So those things are getting under contract very fast. Average, the median is 8 days. So those are ones that are moving fast, if priced correctly and for their condition in the market. The ones from 250 to 500, there you start to see a little bit of discrepancy, all right? Those are going an average of 48 days. So that's what, almost 2 months that they're on the market on average, and the median's only 17. So they are moving fast if priced correctly, but not nearly as fast as that 250 and below market, all right? Now the 500,000 plus, those are on the average market 55 days. You know, that's a pretty long time, a couple months, and the median is 28. So that's a smaller market, there's a smaller buyer pool. That's why those houses are moving as quick. So you can't necessarily say that a house between 400 to 500 is gonna move nearly as quick as a house under 250. So I wanted to be able to show you guys just a little bit of the discrepancies in the market and maybe how they can't apply to every single property. So this is another great statistic that shows you what kind of market we're in is our absorption rate. This is the current absorption rate. The absorption rate is basically how long it would take to sell the current inventory given the current market speed, okay? Right now at under $250,000 range, 1.5 months is all the inventory we have. I mean, that is super, super, super low. A balanced market is like 6 months of inventory. So right now, there are way more buyers than sellers. They're moving fast. 250 to 500, it's got to balance it out a little bit. Still a great seller's market because there's only 3.3 months of inventory, and that's still way below an absorption rate that is considered to be balanced. Now, the 500,000 plus, 6 months of inventory, still a good market for 500,000 plus, but you can see that the market balances out a little bit. As you get towards a higher price point, the inventory is kind of building up just a little bit. There's not quite as many buyers. So that's a good snapshot to show you days on market and current absorption rates for how fast you can expect properties to sell, of course, if they're priced correctly given their condition. So now the forecast looking forward, and these are I am applying some generalities here, but I think it's obvious to say that 2016 and 2017 should still be very strong. Now we have an election coming up. Inventory remains low, so those are driving the prices higher because buyers are bidding more and more. The supply is low, so the demand is high. Plus, money's still cheap. All right. Now, I just mentioned there's an election coming up. There's some big changes coming up to our economy, I think, that are going to probably increase interest rates. They just cannot stay this low. When average interest rates over historical average is 6 to 8%, and we're still in the threes, we are way below. Money's cheap. That's still pushing this market to go. But that will have to increase soon. We'll see how we'll increase the market, maybe balance it out a little bit more. Of course, this is all based on historical averages. We've had banner years for the last 3-4 years in the Omaha market and the real estate market in general. However, there should be some sort of correction probably coming up to balance the market out a little bit. What does this mean for you? It means that if you're looking to buy or sell, it's still a great time to buy. Money's cheap. It's still a great time to sell because inventory is low. So it's a great time to be in the real estate market, but we are starting to see some prices being affected. The upper price ranges are being affected slightly. I know that I've seen properties come on the market that are moving nearly as fast. That's going to be the first market that's going to be affected, and it should trickle down, maybe balancing out the market. So I hope you enjoyed today learning a little bit more about our real estate market. I'm available to answer any questions. Again, I'm not a prognosticator or can predict the future. However, knowledge is power in my mind. So the more you know about what you're getting into when it comes to real estate, the better you can prepare yourself. And I always say that I would never, or only a fool is the person who tries to time the market. It's always a good time to buy and sell real estate. It's just which market are you in and where do you fit in that market. So if you're looking for more information about looking to buy, to sell, or to invest in real estate, I'd highly encourage you to call a professional. You can call the pros at Team Bober at Nebraska Realty. We'd be glad to help you out, help you identify your needs, whether it's selling or buying, or maybe even investing, and to see where you can fit in this market and how we can take advantage of the great things going on in the Omaha real estate market. So thanks for tuning in. I look forward to seeing you next time. Have a good one.